Welcome to 5 to 50, Financial Strategies for Growing Companies, the podcast that gives business owners and entrepreneurs the tools to scale with confidence. I'm your host, Jeff Rudner. In every episode, we unpack proven strategies that optimize finances, improve cash flow, and leverage technology that all drive growth. So whether you're a founder, a CEO, or an advisor supporting businesses, you'll hear from proven experts and leaders sharing experiences and insights that you can use to help your company thrive. Let's build smarter, scale faster, and take our business to the next level.
Welcome to today's episode of 5 to 50. I am super excited for this one. We have an awesome guest. Kenny Dettman is here. He is a 3-time founder, a leader, and entrepreneur focusing on compliance and IRS-related products and services. Kenny's the current co-founder of TaxNow and File Forms and the CEO and managing director at Sagemont Advisors. Kenny's experiences help many entrepreneurs improve their tax management and regulatory reporting through innovative technological solutions. Today, we'll explore his journey through the world of financial advisory, delve into challenges of launching tech startups in legacy industries, and uncover some strategies that drive businesses forward. Kenny, welcome.
Thanks for having me, Jeff. What an introduction. Really appreciate you having me on the show and look forward to diving into some of the details.
Awesome. You did the work, so we're just here to highlight it. I'm excited to dive into this here. I want to start us off in your entrepreneurial journey. Take us to the start of that journey in, I think it was 2020, right? Before 2020, you were a managing director at a large accounting firm supporting SMBs and individuals. What made you start your own business?
So my professional journey started in 2008 when I joined Alvarez & Marsal, which is a global professional services firm with a tax advisory division. And so didn't leave in 2020, actually made partner in late 2019. So you could argue that 2020 might have been the start of part of my entrepreneurial journey, in that was the time when I had my own, dedicated book of business to service through Alvarez. So 2020, first year as partner, COVID hits. I'm thinking, oh my gosh, is my job safe? Is the economy going to collapse? Of course, that wasn't what happens. So actually, COVID created opportunities for me. As terrible as COVID was, COVID is what brought us several stimulus programs, one of which I became very involved with, the employee retention credit. So Alvarez, 13 years, made partner, 2020 hits. My book of business and my client base is primarily private equity-backed portfolio companies, industry agnostic. I would describe it as running kind of back or outsourced tax departments for PE portcos that didn't quite reach a critical mass that required their own internal tax department. So we were, of course, helping with compliance, but also advisory, transactional, et cetera. So when COVID hit, PPP was kind of the first thing that was front and center for a lot of my clients. And of course, PPP wasn't a tax-related service. So advising on PPP wasn't a tax-related service, wasn't an accounting-related service in some respects. So, but clients, as their trusted advisor, right, they turn to their accountants for support for whatever it was that could be accessed as a result of the original CARES Act, and PPP was kind of the first stimulus program that we looked at, and so helped a lot of my clients through PPP. And then at the end of 2020, with the Consolidated Appropriations Act, that was what unlocked the ability for small and medium-sized businesses to access both the PPP and a program that was little known at the time called the Employee Retention Credit. And so I got really involved with, now we're dealing with a tax credit. It's a little bit more in my wheelhouse. I got really involved with the Employee Retention Credit at Alvarez. I grew a task force within that organization. I realized that this credit was actually so important and powerful that there was a path actually for me to potentially leave Alvarez, start my own boutique tax advisory practice, which is now called Sagemont Advisors, and do that full time for as long as it lasted. And the Employee Retention Credit has lasted and will last through April 15th of this year. So left A&M late 2021, started what's now Sagemont Advisors, grew that to about 60 professionals. The employee retention credit over time got a little bit more controversial. We had a lot of non-tax professionals, serial entrepreneurs jumping into that space and turning it into a bit of an industry that was in some ways ridden with fraud, if not fraud, very aggressive positions. Saw a little bit of the writing on the wall that maybe this was going to kind of take a turn in which I needed to start pivoting that business and pivoting my resources so that I could continue to keep my team despite a kind of change in the climate. And that's when I started thinking about building technology, building solutions that when I was a client-facing tax professional, I wish I had. And so one of those solutions is TaxNow, which is an IRS tax transcript monitoring technology. The other is called FileForms. FileForms was initially a BOI reporting solution that has now turned into a solution for a broader suite of corporate secretarial services. And so that's how we got to where we are today.
So that's a lot to unpack, and we're going to dive through a few of those. But I want to go to just the mindset of being an entrepreneur. It seems like even when you were promoted to partner at the accounting firm, seeing an opportunity to create this task force internally is something that an entrepreneur does. It's not typically just a general professional, someone that sees an opportunity that wants to grow something. Did you always know that you had that entrepreneurial mindset, or was it just opportunistic?
I think over the course of my professional career, after post-college, there were always little things bubbling up where I kind of, got to jump on my sort of entrepreneurial spirit or deploy my entrepreneurial spirit.
Which one was the most fun?
So, there were things like side gigging, maybe I shouldn't be disclosing all this, but side gigging on reselling concert tickets, right? That was something I was doing certainly early in my career. Helping my family and friends sometimes navigate transactions, real estate transactions. It always seemed like there was something that was kind of going on in addition to being a client-facing tax professional, where I guess I was itching to kind of break out into my full entrepreneurial mode. Yeah. And I certainly got to taste a little bit of that moving into partner and being responsible for my own book of business. The creativity was there. The opportunity presented itself in 2020 and 2021. And I was fortunate to really feel confident that I'd be able to leave a very cozy, cushy position and be successful. I wish I could say I was the entrepreneur who said, you know what, I'm just going to start from scratch and hope it all works out. So I was really careful and maybe cautious to make sure that I was absolutely confident that I'd be able to have a safe place to land. But thank God that opportunity presented itself. It's changed my life, and I haven't looked back since.
And it's amazing to see that since 2021, when you started your first business, you've gone on to start two more. So you really are scratching that itch pretty hard. Are you constantly testing within some form of incubation? Are you always in some form of incubation mode? Or are you always on the lookout for a new opportunity for your current businesses? Or how have you gone from starting one business to now identifying opportunities and executing on three?
I'd say that I've probably reached my limit in terms of my capacity to scratch more itches, if you will. So right now, the focus is very much TaxNow. There's still stuff that's going on with the legacy business. I still serve an advisory role in FileForms, but in terms of my capacity to kind of look towards other opportunities, it's limited. But within TaxNow, I mean, there's certainly that concept of incubation that's happening on a continuous basis. When I originally dreamt up the idea of TaxNow, the inspiration was largely Credit Karma. Build a Credit Karma-like solution for end taxpayers. That's evolved into a professional product to service accounting and non-accounting firms to manage a portfolio of clients to monitor tax transcripts. And now, just as of 2 months ago, we released an API product to be able to feed tax data into other technology. I was just on a call earlier today with a R&D professional, and she said, well, when are you going to start servicing states? When are you going to start getting into non-tax data? And my thought was, I'd love to do all this stuff, but as an entrepreneur, I think you also have to be careful to try to manage your own capacity and try to keep kind of a narrow-ish focus on some of the higher priority endeavors that you're involved with.
So that actually nicely flows into my next question. Taking it back to Sagemont, you leave your accounting position, you start Sagemont, and it's fire in a pan, effectively, right? You scale from just you and your wife to how many did you say you had at the peak?
60 at the peak.
Yep. 60 people. So when you're scaling at that pace, how do you know what to prioritize?
It's challenging because a lot of decisions get made very quickly, and you can certainly get bogged down in analysis paralysis, taking too much time to make decisions. So I think part of the art of scaling quickly has to do with looking across the pool of decisions or the sort of the pool of work streams that are happening at any moment in time, and figuring out where to allocate your time, and also figuring out or making quick assessments, not making the decision, but looking at the decision and thinking, is this significant enough that I make the wrong move here, that it's something that we can't correct a year, 2 years down the road? Or is it something that we can treat more like a science experiment, where we make a decision? If the hypothesis underlying that decision was wrong, we can course correct. So I'm not sure if I directly answered the question, but in terms of scaling that quickly, it really is the art of decision making and how you're allocating your time across making decisions, and what parts of the business that you're going to be focused on versus where can we feel comfortable that we've hired the right resources to be able to help mine that part of the business.
Yeah. So I think famously Jeff Bezos and Amazon talk about two-way doors versus one-way doors. And when it comes to decisions, determining if a decision can be retracted and the company can go back to where it was before. So having less risk versus a one-way door where you can't go back, and you really have to have strong conviction that it's the right direction. So talk to me about some challenges that you faced early on with scaling, empowering a team, getting everybody up to speed and rowing the same direction. How did you build systems and processes to support that? What were the tools that you defaulted to get that clarity and help you scale?
Most significant challenge, I think, of building a very human capital intensive business is hiring the right people, and also certainly not just hiring, but when there's not a fit, kind of the concept of unfortunately firing fast. In this business that I pivoted to, the employee retention credit, I also was faced with the challenge that the program had an expiration date, which in some ways meant the business kind of looks like it has an expiration date. So trying to attract top talent to come into a business that at the moment in time potentially has this expiration date was challenging, which meant I had to hire a lot of family, friends, people who knew me, that believed in me, trusted in me, had the conviction that we would ultimately be able to pivot. So that was a huge challenge initially, was navigating certainly the hiring of people that were close to me. When it didn't work out, of course, it exacerbated kind of the emotion and the complexity of moving on from some of those decisions. In terms of scaling, I was in some ways blessed with the blank canvas, right? I didn't come into the big firm that had the established process, that had the mindset of, we've always done it this way, and we're going to continue to do it this way. So I got to build the assembly line from ground zero, which was amazing. And it made me realize how much I really love building process and really being able to identify in an assembly line of services which parts of the process are highly repeatable, where do we need to focus on making sure that we have the systems, the process in place that, something doesn't really get screwed up in this part of the assembly line. I kind of often use the term tailspin, like where in the assembly line can we identify where something can tailspin? And how do we solve a lot of that? It's by putting together a lot of like internal guides. With the employee retention credit, for example, we were collecting for any given project. We were always collecting the same 7 pieces of data from our clients. Our PBC, our provided by client documentation request list, same 7 things, which sounds like should be simple for the client to read our list and provide those things. But client inevitably, we'd ask for example, in the PPP related documentation, please provide us your forgiveness application. Well, they'd provide us our loan application. If our people didn't know the difference between a loan application and a forgiveness application, and that got moved further down the line in the assembly process, tailspin. So it was really important to make sure we had training and really like internal guides to always be able to point to and reference to make sure that assembly line was working smoothly, and also understanding what parts of the assembly line can't be automated. So there are very subjective qualitative tests that were involved with evaluating employee retention credit, and that is a piece that not only shouldn't be automated, but it creates a ton of risk if we were to automate it. Others did that. So being able to pick off those pieces of the assembly lines and say, no, we actually have to move this to like a different department, let them pick it up. This is a high touch service, and then put it back in the assembly line was really important.
Wow.
Were there any tools that helped you manage the assembly line and help you manage the team knowledge base? What did you use?
Yeah, so Monday.com was like our workflow solution, and watching our boards evolve over the first year was I mean, if we were to compare where it started to where it is today, night and day. But once the structure and the boards were all set up in where we thought that they were most effective, they really haven't changed much in the last 2 years, and they've been incredibly powerful. So
you're talking about Kanban boards, effectively?
Kanban boards. We tried Asana. Asana wasn't a great fit for us. Migrated to Monday. That ended up being a really, really good fit. So I don't know that, there's obviously a lot of solutions out there. I think, the advice would be, don't just settle on the first solution. But there is a solution that's gonna work for you as an organization out there. Leverage the technology.
Awesome. Did you end up integrating Monday into your other financial systems and processes, or did you decide to keep them separate?
So we went through the classic Salesforce implementation midstream SageMon advisors, and it was not a success. So we did spend substantial time, resources, and certainly money on building a very customized, not off the shelf version of Salesforce, and marrying it and connecting it into Monday. Was not successful. Is not used today.
Why do you think it was not successful? We hear that consistently and often.
I think we tried to boil the ocean on customization. Of course, when you get sold Salesforce, if they want to put somebody on it for implementation, and then implementation to the extent that it can be customized means more fees, more certainly more time to implement. I think if we started simpler and used more of the off-the-shelf solution, and then from there slowly customized towards our needs, I think it would have had a greater chance of success. But the reality is we also started probably too late. So we tried to insert Salesforce into a process that was mostly working. And so adoption was also a significant hurdle, which was not just a hurdle at SageMon. It was a hurdle when I was at Alvarez. We did a Salesforce implementation there. You can design and customized to perfection. But if your professionals don't use it in the intended way and there's not adoption and buy-in across the firm, it's going to fail. And so for me, it failed when we were at Alvarez. It failed at Sagemont. We're on HubSpot now and we like it. And we did not do any customization with HubSpot.
Wow. One of the things we recommend often is, or where we start with the clients, is doing an assessment, understanding the current state, defining what the ideal future state is. And in that process, trying to get as many of the participants in that process involved. So that way everyone is at least involved in the process to define that ideal state. So that way, when it comes time to go through that change management, people aren't caught off guard, and we have the highest chance of success for adoption. Sounds like some of that might have been done, but there's a lot of just go and figure it out. Is that kind of how it was going? You're moving so fast that you didn't have the time to assess and define?
So there was certainly representation from sales and operation and as part of the design and the conversations around customization. But that was from leadership. I think what you're describing is, as you move further, maybe down the food chain in the departments, like the input from the boots on the ground is probably and arguably more powerful than maybe the influence from the leadership. And so that's absolutely part of why I think it probably failed. While leadership says this is how we should be doing it, because the boots on the ground weren't involved with influencing the design and weren't prepared when it just, here it is, force it down your throat, do it.
Yeah.
Wasn't embraced in the way we were.
Right. Yeah. So much of what we see is leadership will define and a lot of requirements, and companies will build an ERP that can automate things that are typically done by spreadsheets, and they roll out the ERP, and the team that's actually preparing the spreadsheets doesn't migrate to the ERP and said, I'm just more comfortable using my Google sheet or my Excel sheet, and I don't really care what the new software can do. I know that Excel works great. And so it's super important to get that buy-in or get that participation at least, so that way when you get that, you have the highest chance of adoption.
Absolutely.
So we're continuing to talk about scaling. We're talking about across all three companies, really. When you're growing a business, how do you determine what metrics and what financial numbers to track?
So it's been challenging, particularly with the number of businesses that I've been involved with. And we're potentially not great across the portfolio at really using our data effectively. So we use grow.com for a tool to obviously ingest and synthesize data. And so determining
grow.com,
Grow,
the G.
I think Grow, or actually the website might be GoGrow.
Okay.
And so I think you could compare it to an Airtable. Certainly provides some helpful dashboards and insights. In the ERC business, it was pretty simple. There was like one product we were selling. And so, the metrics around, how many prospects are live, how many live deals do we have, how many completed deals, what's the amount of the credits that we've generated, fees, like fairly simple in terms of metrics over there. And we were always cash flow positive, and the balance in the bank account was never a concern. Now I'm in I'm involved in two early stage tech startups, and it's just a completely different world from where I came from with Sagemont, and really understanding your runway, your burn, what it takes to move from current burn towards potential break even, understanding obviously not just the gross numbers, but what are the underlying KPIs that we need to get there. How many within the TaxNow world, how many end users, how many pro users, how many API connections, what does that translate to in terms of being able to extend from our 12-month to our 24-month runway? What happens if I decide I want to throw a developer or two in the mix? How does that change, where we need to get to from a sales and business development standpoint? So, the various like levers that you're pulling in terms of resources that you want to throw at the business, and not just the expense effect, but the expense effect, and thinking about how do I counterbalance that with more sales, more customers, more business development. All of those moving parts are increasingly more complicated for me to navigate, which is why it's been important for me to leverage a network of advisors, both internally and externally, to navigate those waters.
Yeah, absolutely. It's always super hard for growing businesses to balance profitability and growth. Typically, those go in opposites, and having a conviction that utilizing or that investing now will result in future growth or future returns. So it's tough. So let's talk a bit about financial processes in all three. When is the right time to build financial processes for your companies, and when is it important to have those numbers at the ready versus just kind of winging it, fly by night? Things are going well, so I don't really need to track too much. I can check the cash in the bank account, and I know how my business is doing. What's your recommendation, being on both the professional services side of it and being a business owner?
Well, I got to learn a lot from the professional services side of it, and what I was able to learn by working with PE portcos that might have been private or founder owned prior to being PE owned, is that if you don't invest in financial processes on day one, or at least in year one or year two, and you let things fester, you let bad processes fester, the hole you need to dig out of when it matters. And arguably, when does it matter? Well, when some institutional investor wants to come in and wants to validate your books and then set you on a path to be potentially reviewed or audited on a go-forward basis. Like, not only can that prevent you from raising capital, it's also going to detract in a major way from goal number one, which is to build a product and sell to customers. So I got the benefit of seeing some really messy situations early in my career, that from day one in building these three businesses, I was not willing to skimp on processes around financial reporting and financial data. So my advice to other founders is to do the same. It will eventually catch up to you. And so don't underestimate how much bad processes, bad financial hygiene can compound and negatively detract from your business in a meaningful way when it really matters.
Yeah, absolutely. Obviously, we're two accountants and finance people here chatting about the benefits of finance and accounting, but you've seen it too many times, honestly, where a company is looking for outside investment, they're looking to sell, they don't have their numbers right, and it just immediately erodes confidence with the potential investor or a potential buyer if the numbers aren't ready or if they're not clean. It's kind of table stakes. If you have your numbers ready, you can focus on what's important, which is the business, versus how getting someone over the line on what those numbers mean or what's really happening. So yeah, I completely agree. Getting it done, getting it early is also much easier, right? Doing that, you talked about the financial hole, not just from a cost standpoint, but the time that it takes to clean up bad processes, bad books. It's got to be tough.
There's the trickle effect into bad financial data fed to whether it's investor or how about your auditor or your tax preparer. It makes their life more difficult, which means higher fees and more delays. Like, there's so many other ways that sort of the bad hygiene can negatively impact a business.
Yeah, or your internal team too, right? If the sales team's getting data that they're closing sales at a high rate, but that revenue is not going to be recognized for 6 months or a year, they might be focusing on the wrong aspects of the business. Or there's a lot of things that can break if everything's not aligned and everyone's not looking at the same numbers, right numbers. Cool. So let's take it back to just high level on your career as a whole, thinking about it, looking back, what has been the best decision you've made in your professional journey?
I'll give you the general answer, which is a number of decisions that I've made, which is to always always embrace putting myself in a position where I feel uncomfortable. So I can think back to maybe year 5 at Alvarez and Marsal, and I got a call from the CEO of the tax group. And he said, Kenny, we need a resource out in San Francisco to go work on this big deal. It's going to be 12 plus hours a day, and you're going to be working on a variety of related services that impact their tax provision or the review of their tax provision. And I'm thinking in my head, like, this is so overwhelming. I'm not ready for this. I don't know enough about tax provisions. And I remember telling the CEO, can I sleep on it? I'm not really sure whether or not my schedule permitted, basically. And I slept on it, and I thought, you know what? If I don't do this, I'm going to regret it. Let's put myself in an uncomfortable position. Let's see how it goes. What's the worst that can happen? Went out there. I was incredibly uncomfortable, but I made some very significant relationships and as a result of making that decision. The firm embraced the fact that I put myself out there in something they probably knew I was uncomfortable. And so, my advice to other professionals, entrepreneurs, is like, embrace what makes you uncomfortable. Of course, when I jumped so the best decision I ever made was actually leaving Alvarez and Marsal and starting my own business. That's changed my life. I don't think, I'm fortunate where I think I'm probably in a position where I'll never have to work for anyone directly again. Sure, we'll have institutional investors come in and might feel like I'm working for somebody else, but I think I've created a situation where I'm not going to have the big firm hanging over me. So that was certainly the best single decision I made that kind of translates into the more general guidance of just do things that make you uncomfortable. But then maybe jump back a little bit to your one-way doors and two-way doors. Like, you sort of have to also make sure that you're not going into a one-way door situation if it's something that makes you uncomfortable and there could be a major failure from it, and not have a way to go back from that. I think you have to apply that logic as well.
A risk-weighted one-way door, maybe. But it's kind of interesting and a little funny when you think about it, that from an outside perspective, that your business is completely dependent on laws and regulations that are not decided by you directly. So how do you think about risk when it comes to building your business in those industries based on administrations that are changing or laws that are changing? Obviously, you've been flexible enough to pivot into different areas where needed, but how do you maintain that flexibility, and how do you approach those theses?
So when I described leaving Alvarez and having a safety net to land on, or a soft landing place, since the success of Sagemont Advisors and pivoting into other very regulatory influenced technology businesses, not comparable to the move from A&M to Sagemont. This is putting myself into I know I'm getting into a pretty risky business here, and high risk, high reward. The BOI reporting platform, FileForms, has that product is effectively shut down in full because of a variety of judicial and legislative influences. Of course, I have also influenced the organization to be building products behind the flagship product that we all knew that there was a bunch of risk around. So, we've launched a annual reporting, company formation, registered agent service alongside that. So making sure that you kind of have these embedded safety nets or redundancies for, well, what happens if? Right now, TaxNow, my main focus relies on the internal revenue's willingness to allow tax professionals and tax technology to access their data, right? But that can change, that can evolve. So kind of understanding, or having a plan for, what happens if? well, what happens if the IRS decides that we have to access the data in a different way or limits the amount of data we can access? Always trying to think one step ahead of, well, what happens if, knowing that, there's always actually a chance that we might not recover from a substantial legislative or just judicial change. Knowing that that's omnipresent is just sort of what I signed up for, I suppose.
Sure. But what I'm hearing is something that's kind of taking back to where we started the conversation, is that you're always kind of ear to the ground for opportunities and utilizing your skill set and the skill set of your team and resources to potentially monetize that. So whether it's going back to the days of you selling tickets or advising on real estate transactions, things that you have that foundation for testing internally fits right in. So it sounds like you have a common theme here.
Yeah, that's a nice way to tie it together, where sort of feels like I'm side gigging within the same company. My attention can be drawn towards shiny objects that, maybe this is the solution if this happens.
Yep.
And I mentioned a minute ago, TaxNow is a federal product. There's a lot of interest around state tax data. That's another way to a safety net or create that protection for, well, what happens if the way we access federal data changes? We have a product where we can access other data, or maybe, delve outside of tax data. All of these things help mitigate the risk. They don't solve them completely.
But you're still laser focused on the main thesis. These are dabbling opportunities. They're not changing the business.
Complementary, right?
Yeah.
But they still help create that kind of embedded protection,
right? Because we see so many early stage companies get opportunities from a big customer, but they need to change their business model for that customer, or they need to change technology, and that creates concentration risk, which may or may not work out. But if they take that opportunity, it could be a gold mine, or it could tank the company. So sounds like you're focused on your thesis, and
it almost happened for us. We were very close. So
really, tell us about it.
So 6 to 8 months into building TaxNow, we were approached by the largest player in DIY tax preparation, interested in how can they facilitate the ingestion of tax data into the tax preparation process. Ultimately, it was not a fit. TaxNow is not a product that you can sign up for today and instantly access tax data. It does take anywhere from 5 to 10 days. And thankfully, that was a deal breaker. But thinking back, and of course, we were all disappointed that the kind of concept wasn't embraced, and that ultimately they decided not to pursue this avenue. But had they, I think it would have really been detrimental to our business. Oh my gosh, the name brand that everybody recognizes wants to partner with us, drop everything. By the way, the product is not even, the MVP is not even launched, but drop everything and let's figure out like how we can deploy all resources to service this one customer. And I kind of count my lucky stars that we obviously learned a lot about more kind of about our product and how other big technologies are thinking about it. But I count my lucky stars that deal didn't happen, because I really think it would have been detrimental.
Awesome. Well, thanks for sharing that. That's it's a common story for early stage, and glad that it worked out. So, Kenny, thanks a lot for the time. I would love to take us out with a few rapid fire questions. What's the one technology across your businesses or your life that you couldn't live without?
Outlook.
Easy one. What is the best piece of financial advice you've ever received?
This might sound counterintuitive. It's not quite financial advice, but sort of the concept of things are working, hire ahead of revenue. Put resources and expenses ahead of that revenue that's sitting and waiting to be unlocked.
Yep. Awesome. What's one common misconception about growing a business that you like to debunk?
I would say that being the leader is a joyous kind kind of collaborative experience amongst your co-leaders or manager level people. Being a leader of an organization it can be a lonely, isolating place.
Yeah, it is lonely at the top. I feel you on that one. Kenny, where can people find you online if they're interested in learning more about you or any of your companies?
So I'm pretty active on LinkedIn, so certainly find me on LinkedIn, taxnow.com, fileforms.com, sagemontadvisors.com. We're pretty proud of our thought leadership, our content. So there's plenty of activity across the portfolio, and certainly activity on my LinkedIn's my preferred social media channel.
Awesome. Kenny, thanks so much for being here, and I'm sure we'll have you on again soon.
Thanks for having me, Jeff. Appreciate it.
Thanks for tuning in to 5 to 50. If you found today's episode helpful, be sure to subscribe, leave a review, and share with other business owners looking to grow. Do you have a question or a topic you'd like us to cover? Connect with us on LinkedIn or reach out to us at ProSeer, where we're empowering entrepreneurs with real-time, actionable insights and financial infrastructure through smarter accounting, tax, and financial strategies. Let's keep this conversation going. Together, we'll help our businesses thrive. Talk to you soon.